Trendy Co. produced and sold 30,000 backpacks during the last year at an average price of 25 per unit. Unit variable costs are the following. These are the unit variable costs. Variable manufacturing cost is 9. Variable selling and administrative cost is 6. So total variable cost is 15. Total fixed cost was 250,000. There was no year-end work in process inventory. If Trendy had spent an additional 15,000 on advertising, then sales would have been increased by 30,000. If Trendy had made this investment, what change would have occurred in the Trendy's pre-tax profit? So let us first find the contribution margin. So contribution margin is equal to sales minus all variable costs. The sales is 25 per unit and all variable cost is 15. So the contribution margin comes to $10 per unit. Now, if Trendy has spent an additional 15,000 on advertising, so the expense is increasing by $15,000. The sales will increase by 30,000. So per unit, what we are selling? Per unit, we are selling 30,000 by 25, which is 1,200 backpacks. By selling 1,200 backpacks, the contribution margin is 10. So the contribution will come to 1,200 into 10, that is 12,000. So we are getting a contribution of 12,000, but the expense is 15,000. So the difference between expense 15,000 and 12,000, there is a loss of 3,000. Now let us understand this in terms of table. Now, the original sales, we sold 30,000 backpacks. Additional sales was 1,200 backpacks. The total sales was 31,200 backpacks. The original contribution margin that we calculated as contribution margin is 10. So 10 into 30,000 will give you original contribution margin as 300,000. So additional contribution margin is 1,200 into 10, which is additional contribution margin comes to 12,000. So the total contribution margin is 312,000. So advertising expense, in the original situation we don't have advertising expense, but here we have advertising expense. And the original fixed cost is 250,000. So the original pre-tax profit is 50,000 and net pre-tax profit is 47,000, because we have incurred total advertising cost 15,000, we have incurred expense of 15,000 and we are getting a benefit of 12,000. So that's why there is a decrease in the pre-tax profit of 3,000.